In this episode, I discuss how you can earn life-changing rates of return on your investments with very little overall risk by choosing your investments using the barbell strategy. This is dollars and nonsense. If you follow the herd, you will be slaughtered. Well, guys, as I open up this show, it's going to be a bit different than my normal show. We'll say that. This is the first time I've ever brought this to the audience at large in the amount of detail that I'm about to give. And because of that, you'll probably find me talking a bit slower in this episode. So if you don't like the slower nature of my cadence, you can just speed up the playback speed, whether you're on Apple Podcasts or YouTube or whatever. Just speed up the video if you would like. And the reason I'm going to take it a bit slower is I think I have a lot of technical ground to cover, and this is the first time I've done it, and so I want to offer some time for my thoughts to be collected. By the way, for those of you who don't know, it actually can be pretty difficult to do a solo episode on such a complex topic like this in a discussional-based format. In other words, without like a script to follow or having done it before. It's actually very easy to have discussion-based podcasts, which is why you'll see most podcasts have multiple people on it, like what Holly and I have been doing for years. This is like a challenge for me to be able to come out and do this on my own, but I hope you're enjoying them. I'm enjoying the challenge. I think it's really fun to be able to come out and just me and the microphone and share my thoughts on a detailed subject. What I'm going to describe is something that I have brought up in bits and pieces before that I've been learning as I've been reading the book called Anti-Fragile. Now, this book I've mentioned a few times on this show. It is a very verbose, difficult, grinding book to get through, but some of the concepts that he presents in the book Anti-Fragile have such huge applicability to the infinite banking concept and our movement. For all of you who are in IBC, you are in this movement. And part of why IBC is so compelling and part of what makes this movement so strong is actually based on some of the concepts that this individual puts forth in his book called Anti-Fragile. Now, the guy doing Anti-Fragile is not an IBCer, but if you were to read it, you'll see so many correlations between what we're doing. In other words, what you'll find out is that the reason IBC is so compelling and the reason that it works is based on some fundamental truths of reality. And that's what the book Anti-Fragile is all about. So just one quick note on this before we dive into what he calls the barbell investing strategy, which is one topic amongst many that he writes about and is one that I think is very pertinent to all of us, especially in a financial show. The name of the book is Things That Gain from Disorder. And the idea is that the world at large is run more than we think it is, that wealth is created or lost more than we think it is based on black swan events. One-off, unpredictable, world-changing, life-changing events. So in other words, there's world-changing events, black swan events, and then in your life, there will be individualized black swan events. Random, unpredictable, unplanned events. And his theory, and the theory of Anti-Fragile, is that fragile things often require a level of predictability. If you build your entire life ignorant of the fact that there can be random, unplanned for, low probability events that can be extremely destructive. And that's the biggest issue he talks about, is that most of these events are destructive if you have built your life up based on probabilities. There's a deeper thread, and you'll have to read the book. I'm not going to try to do it justice. By the way, you may not even enjoy the book. I'm just merely saying that he brings forth this very, very cool concept that I think runs in tangent to IBC that we're going to take advantage of. So essentially, because of this reality, he recommends that one of the truest, most sure ways to produce financial success is to adopt what's called the barbell investing strategy. A strategy where you can earn life-changing success, life-changing returns with what amounts to a lower level of risk than anyone would have ever thought. And so what the barbell means is that one side of the barbell is going to be extremely safe, liquid, low risk assets that help overcome inflation, but the main goal is just to preserve the capital in a safe, liquid place. If you want to create an anti-fragile place, choose to have a big chunk of your overall net worth of financial capacity on one side of the barbell. And then avoid the middle ground, which we're going to talk about, and only take capital and invest it on the other side of the barbell. And on this side of the barbell, there's essentially, you're going to take advantage only of investments that produce asymmetrical returns. So what this means is you're only going to focus your attention on investing money where you have almost an unlimited upside if things work out well, but a very low downside, or at least a known downside if things don't work out well. I've got a lot to say on this, but that is the barbell strategy as a whole. Keep a lot of your capital safe, liquid, secure, growing competitively with very, very, very little risk. I think the best place on planet Earth is dividend-paying whole life insurance policies for that, a la practicing IBC. Take capital from that reservoir and only take advantage of opportunities that have asymmetrical returns. The idea, by the way, of an asymmetrical return is that you will receive a life-changing amount of success if things work out there. But if things don't work out there, you have not ruined your financial position. Hence the barbell situation. You will know what the risk is and you can take advantage of it. We have a lot to say on this, but it's going to produce asymmetrical returns in your favor. Compare this, though, to what we almost always get pitched. All of us in the investing world almost always, by default, are getting pitched investments that belong in the middle of the barbell. Almost always we're getting pitched opportunities where we as investors are taking the majority of the risk on our shoulders. Like if you were going to go into a real estate deal and you're getting pitched by an investment group to put your money with them, this is what's typically called a middle deal. The idea of the middle is that if things work out well, it's unlikely that you're going to receive some sort of life-changing event. You just may earn a decent return. If a black swan event shows up, and none of the projections, of course, are going to show what might occur if a black swan random low probability event occurs, whether it's in the business investment model that they chose or whether it's in the national economy as a whole or worldwide where something happens. In other words, what we're trying to say is you could have a pretty good return if things work out well, but if a black swan event occurs, you could lose all the money you've put with them. And so you are bearing the majority of the risk. By the way, I'm not opposed to investing in there. So don't sit here and think Nate's never going to want you to invest in anything in the middle. I think that's unlikely. I'm just merely saying understand for yourself whether or not you're investing in something that's in the middle or something that is in the barbell approach that produces asymmetrical returns. So essentially what like a real estate syndicator or a real estate fund or some of these cash flow alternative investment based folks and even mutual funds and all sorts of these things, all of they are trying to promote is essentially you put all the money in, you take all the risk. Maybe they have a little bit of risk, but the question is who is going to achieve a life-changing level of success if this thing works out? It is almost always the people offering the investments to investors. So they offer middle barbell, middle level investments, and they are the ones who are going to benefit in the barbell where they have lower levels of risk and higher levels of wealth success based on how they've set things up. And so we get pitched middle of the barbell investments, and the people who are pitching those investments to us are oftentimes living their life with a barbell style approach where there is an asymmetrical level of success and possibly life-changing success. If their investing business works out, their life is changed forever. If the one investment they pitch you works out, you earned a decent rate of return and you got to go find another one. There's no sort of asymmetrical thing happening on your side. Of course, by the way, people listening to this would say, well, Nate, of course everybody wants an asymmetrical return, but there's just so few of those. I disagree. And we'll spend the rest of the episode talking about that. I disagree. I think that's a foolish thing to say. Most people do not believe that these opportunities are even available. So they're not looking for these types of opportunities. And then on top of that, since all of their money is tied up in the middle, even if an opportunity would show up, they wouldn't be able to put forth enough money for it to be life-changing. So this is what I wanted to kind of spend the rest of the time sharing. What would be an example of some barbell style approaches? So the idea here would be to take us back to the last time a black swan event wiped things out, which really would have been the Great Recession of '08 and mix into that the housing crisis of '06 and '07. If you had read his book and if you were building your life this way, you would have avoided middle of the road real estate deals, which by the way, all lost money when the Black Swan event housing crisis went south. If you were in a middle of the road real estate deal investing with somebody, you were lucky to get your money back in that season of time. And so if you had put a whole bunch of your money into assuming that everything was always going to go well and you had no liquid capital as a reserve, you easily could have lost money in that instance or taken a long time to sit on assets that were underperforming for a very, very long time. Compare that to the barbell approach. What if you had entered the 2006 housing bubble and collapse of the housing market in the United States and the entire real estate market here, not even just housing, but commercial as well? What if you had chosen to avoid the middle of the barbell investments in just basic real estate properties and so forth, and instead you were doing IBC, having a lot of liquid capital on one side of the barbell that's going to be completely unaffected by the recession, still growing and looking great in spite of the recession. And then when the housing market bubble bursts, you are now sitting where everyone else is losing money in the stock market, losing money in the housing market. Their capital is dwindling away. If they had borrowed money to buy properties, they may own properties that are underwater. They're not even able to rent them for what the mortgage is worth. They're filing bankruptcy. All hell is breaking loose thanks to this Black Swan event. And here you are in a barbell approach where you have nothing to lose in that situation based on practicing IBC. You can then have a life-changing asymmetrical based return opportunity is going to open itself up to you. And that is, we can start buying, whether it was stocks or whether it was preferably real estate at the time, we can start buying these properties for pennies on the dollar. The thing about a life-changing opportunity, a barbell-based opportunity, is you only need to take advantage of one or two, a very small number in your life, and your life will be changed forever. That's the whole idea of this concept. There's only so far real estate can go, and it plummeted down to the bottom of the barrel. So you have very low risk to even buy in at that point. You had a lot of cash. You didn't even need banks to come in. And suddenly you get to ride the wave of the economy, empowered by the Federal Reserve, low interest rate environment. I know people who became independently wealthy beyond measure just because they were in a position to take advantage of that opportunity that was available to everybody depending on how you had situated your financial life at the time. We call it using the barbell strategy. We've actually tried to make this point about infinite banking before, and I'm going to make it towards the end of the podcast too, but I'm just going to kind of reiterate this, that it's hard to put the value of IBC on a spreadsheet because spreadsheets make a whole bunch of assumptions into the future of what it's going to look like, and you can't put events like this on a spreadsheet. So in other words, the real value of IBC is significantly higher than you can put on a spreadsheet because it allows you to gain from Black Swan events. The benefits from investing in real estate in middle of the road investments, or the stock market in the middle of the road style, we're going to talk about that too. Investing in those you can put on a spreadsheet, but they're the ones that suffer from Black Swan events. And so one of them is getting an unfair shake, IBC, when you compare it to another one that's getting a bigger shake than it deserves by choosing average returns, as opposed to what would happen if you're in retirement and a Black Swan event, housing crisis, financial bubble burst happens and you have to go back to work at age 75 because you lost half of your asset value. They're not the same. One is anti-fragile and one is fragile. So you can't compare an anti-fragile to a fragile to say one's better than the other based on projection, based on happy assumptions occurring in both, because it's unlikely for happy assumptions to occur in both. What happens when unhappy assumptions occur in both? Well, one of them can't have an unhappy assumption, one of them can. I have been doing infinite banking since 2012, so 11 years now. And I have taken advantage of a few investments here and there. I've been pitched many investments over the course of time. Sometimes I will have regretted not taking advantage of them. But at my core, I was unimpressed with me taking risk without an asymmetrical ability for return before I even could use terminology to describe it. So I would pass on investment opportunities, or if one came my way, I just wouldn't put a ton in. And what I realize now is all of the investments that I was being pitched at the time were middle of the barbell investment. In other words, what I was trying to say is, why would I put money in there? I could lose it, and even if it works out, it's not going to change much for me. And I always had in the back of my mind, I am going to be sitting and waiting to to put a lot of capital in once I find the right opportunity to do it. And so I have been accumulating capital every now and then. I'll put some money in something here or there, but never huge sums, because I'm thinking these are middle of the barbell scenarios. I can put a little bit of money in, but I'm not going to live there. I want to live on the safe side of the barbell and the life-changing side of the barbell. By the way, without giving too much detail, I feel like there are some opportunities that presented themselves to me now that are more barbell-based approaches that I'm about to take advantage of, that I think are going to offer very low risk, and if things work out, life-changing returns. You will find, if we're going to continue to get more examples of this, that most of the barbell life-changing returns exist for people who are in business. In other words, it's the businesses that raise money from the middle investors. It's the people who start a business that may use the bank's money or other people's money to build their business to where they actually know that if this business takes off, my life has been changed forever. If this business doesn't take off, I don't have very much to lose. I have created an asymmetrical way of life. We've got clients who decided to open up franchises, not to invest in somebody else's franchise. That's a middle of the barbell that offers a potential for a decent return, potential to lose all your money, and no life-changing scenario. But if you are the primary driver of the group that is now going to invest, you have very little to lose and a life-changing amount of success to gain. We've got clients who are doing that have been extremely successful in the world of franchising, and it's successful based on its barbell approach. You can essentially put the bank in the middle of your barbell and use their money. They have all their money to lose if your business fails, and they're the ones who put the majority of the capital in, and yet if it succeeds, they just simply get the interest rate on the loan. And if it succeeds, you get your life changed forever. This would be the idea of a barbell approach. Robert Kiyosaki uses similar style terminology to describe his recommendations. He believes that everyone should be a type A investor in something. Almost all of the barbell-based opportunities, the life-changing opportunities, occur for what Robert Kiyosaki calls a type A investor. A type A investor is someone who you are not investing with someone else. You are the expert. You are the one who is going to run the business. It'd be like me and Living Wealth, per se. I am a type A infinite banking advisor. I have become an expert in this. It is producing a ton of income because of clients are wanting to work with me and all sorts of things. I'm in business. Most business owners are a type A person in their business, which is one of the reasons why we believe for almost every individual, no matter what kind of business you own, the best investment you can make is an investment in your business, because you have become a type A individual. The highest rates of return and the lowest level of risk is always for someone who is a type A individual. This is why you'll see some people will invest money in real estate in a type B sort of way. The type B is just Robert Kiyosaki's term for middle of the road investments. You are a type B investor if you are not an expert and all you're doing is trusting an expert. You will rarely ever receive an asymmetrical return where you have very little to lose per se and life-changing events to gain. Those don't exist in the middle of the barbell. Those don't exist in the type B investor world. You can put some money in, receive some returns, that's fine. It's just understand that what will truly create a huge level of success and an ability to be anti-fragile is that if you have a ton of your capital sitting aside, available anytime, that can absorb the fact that you can lose anywhere else on the barbell, it could all go south and you would still be secured because of the amount of capital you have sitting here. And try to focus the majority of your energies searching for an opportunity that produces an asymmetrical ability to create success in your life, to be life-changing.
The conventional financial system makes the bank rich using your money and pays you next to nothing in return. At Living Wealth, we believe in challenging the status quo. After all, most of those conventional tools only seem to make someone else rich. Let us show you how to become your own bank. Visit livingwealth.com/bank on yourself. You'll receive instant access to what we call the beginner's course. This free, in-depth, easy-to-follow course teaches people how to create and profit from infinite banking. We not only discuss the philosophy and principles behind infinite banking, but also offer real-life examples to demonstrate how it works. Even participants experienced with infinite banking often tell us how they learned a ton too. It's worthwhile regardless of your experience level. Stop letting the banks and Wall Street dictate your financial future. Again, that's livingwealth.com/bank-on-yourself to gain access to the free course today. Now back to Nate and Holly.
So I think both Robert Kiyosaki and the anti-fragile concept are pointing to this, that there are opportunities for people to use other people's money, whether it's banks' money or investors' money, to create type A, barbell-based, life-changing opportunities. Where, in other words, if things start to work out in that arena, your life is changed forever. And if things don't work out in that arena, you're going to be okay. And you've seen that in the world of real estate all the time. There's a lot of people listening to this who are type A real estate investors who are using investor money, like raising money from other people, and they are using bank money, and they are risking, per se, other people's capital. But the investors that they've raised money from, whether it's a bank or whether it's other people, kind of have a fixed return, but they could lose everything if things don't work out. So the return is capped, but the loss is not capped. The loss could be every dollar you've put in. And the investor himself has an unlimited return, per se. An unlimited return with very little risk of loss. Now, of course, if the business fails, they may lose the business and everything that they've put in as well. But if they set themselves up correctly with asset protection things, they can limit their losses to where they don't have to restart completely financially, while also creating a life-changing amount of potential. This is the idea of the barbell approach. It's something I've been yearning for this entire time. I've been biding my time for the last 10, 11 years, trying to find what I want to be a type A investor in. What do I want to take advantage of as far as the barbell approach? And why would I invest in these middle of the road deals with all my capital? I don't have enough to gain from it. I'm doing fine inside of policies. I like to earn 4 to 5% tax-free with no risk on as much money as I possibly can inside my policies. I will leverage that to take advantage of an opportunity. And I've said it on this podcast many times. I can't wait until the next true recession. I can't wait until the next housing bubble. I can't wait, because opportunities are going to show up at the doorstep of those who have this as their mantra. And if that doesn't happen, that's fine. I'm still going to be choosing. I don't need an economic collapse to take advantage of it. I'm also going to choose to find a business to invest in, things to do where I can have control over it. I can understand what it is I'm going to lose if it doesn't work out. But if it does work out, my life will be changed forever. And there's a few opportunities sitting on my desk right now that I'm running with, and I'll be able to tell you how that works in the next couple of years. We'll look back to this episode and say, has Nate's life changed because he chose to do this for the last 11 years? How could I have put that on a policy spreadsheet for what infinite banking was going to do for my life? How can you do it? I would not be doing this if it wasn't for IBC's influence on me. I would just be a middle investor guy. I'd be stuffing money in mutual funds and in occasional real estate syndication. I mean, I would be doing these things that I'm sure things are going to work out okay, assuming no black swan event occurs. I'm sure it's going to be fine. I'm just saying my life's not going to be changed by any of those. True wealth is barbell wealth. That's really what it is. Ask anybody. Barbell wealth. Business and type A investor wealth. It creates barbell style opportunities where life-changing, super successful opportunities if things work out with a lower level of risk than anyone would ever think from the outside. Inside of this, by the way, one thing that I would recommend, this idea of becoming a type A investor in something, I think for everyone listening to this show, it would be beneficial for you to become a type A banker, by the way. And I've been thinking along these lines for quite some time as well, that you can choose to just put money in a whole life insurance policy as a type B person. And you can leverage it sometimes and have some benefit from it, but you're not a type A banker. I'm just simply here to say, and we've said this before on the podcast, banking is the default financially. You are in the banking business by default, and you will never be able to escape. While you're here, you might as well become a type A banker. You don't have to be in real estate if you don't want to be. You could choose to invest in it. You could choose to sell all of your real estate. You're not required to be in real estate till the day that you die. It is not the default. You don't have to be in the stock market until the day you die. You can put money in, you can take money out. It's not the default. But inside of banking is the one place. It is the default. Banking is inescapable. So I feel that you might as well become a type A banker while you're going to be in it anyway. And if you're going to choose to focus more of your time and energy with the idea of the barbell, life-changing, asymmetrical, in your favor investing opportunities, then it would make sense for the one side of the barbell that's supposed to be safe, liquid, and secure. That's where we believe banking belongs. Don't just trust somebody. Get to know IBC. Become a type A IBCer. That will benefit you for the rest of your life to become a type A IBCer. Whether or not anything else works that you try, IBC will work, and the better you are at it, the more it will work for you to begin with. So I think it behooves everybody to become a type A banker and then leverage their banking business to go become a type A investor, business owner, or something. But get a niche. That's what Robert Kiyosaki is saying. Get a niche that will allow you to create asymmetrical investment opportunities for yourself by becoming a type A barbell-based investor. Don't spend all your time in the middle. Don't let your ears get tickled. Remember, it is the type A people, the business owners and the type A investors who raise money from other people, from type B folks, and they offer their investors middle of the road, middle barbell opportunities so that they have set amounts to gain, plenty to lose without any life-changing effect. The type A people, the business owner people, those are the ones that have a barbell approach. Limited loss liability with life-changing, unlimited success. I think everyone should try to do that. But I do know that it's not for everybody to do this. I'm aware of that. I'm not opposed. I have money in middle of the barbell investments, of course. What I do, though, is I tell people this. I'm willing to put some in. I'm just not going to put a lot. Even though the opportunity seems fine, it's not a barbell opportunity. You can have a little bit of money in a non-barbell opportunity, but not a lot. I reserve the majority of my capital to take advantage of barbell opportunities. That way I know that there's a low level of risk and a high level of reward. I think that everyone should become, as I said, a type A banker. I think it's going to help you in any other thing you want to become a type A in. You can do them both at the same time. You might as well. You're going to be in banking anyway. Last thing I wanted to mention too, as everybody here knows, I care more about the philosophy and the perspective of infinite banking more than I care about practical examples. And the more I read Anti-Fragile, the more I realize the reality behind it. People really want practical examples because they want to know, how can I use IBC when I have it? What's it going to look like when I actually do it? But what I'm here to say is that how you do IBC will become more clear the more that you adopt the proper perspective and philosophy of a banker. In other words, I want you to be able to think for yourself as an IBCer. Don't be beholden to me and what I suggest you do and the things I recommend to you. Don't be beholden to the examples you find on YouTube. You should use those as a springboard to become a type A banker and learn to think for yourself in this world of banking. That's where you'll find the majority of success. I believe that I can teach you to think for yourself if you spend time in this podcast. You will learn for yourself the ideas, philosophies, and perspectives that allow you to become a type A banker, in which case you will no longer care to ever see an example ever again. Examples are middle of the road things. Everybody who's selling a middle of the road investment opportunity, a middle of the barbell, is putting numbers on a paper, sending to you, do you want to put some money into this? It's the people on either side who understand how the things work. And they understand beyond the numbers why it produces a life-changing opportunity. So if you're going to become a type A expert at something, you have to learn to think for yourself in that area of your life. I think that in reality, the idea that policies, when used for the IBC purpose, can help create an anti-fragile life, you can't really put it on paper. You have to live it and experience it and believe in it to see the real value. So in other words, if some of the opportunities I have before me on my desk work out, you can look back at my last 11 years and say, you know, Nate, you missed out on a lot of good opportunities. Nate, you missed out on investing in some real estate before the 2021, real estate bubble got blown up gigantic, and that, given it hasn't even collapsed yet. I'm just merely saying you missed out on this, you missed out on that, you missed out on some stock market returns, you missed out on some real estate returns. And I say, you know what, you're right. None of those things would have truly changed my life, and I wasn't a type A investor in any of those things. I would have just been investing in turnkey properties, which are always middle of the road properties. It's going to take a lot of time, energy for those to really develop, and it would have been fine. but I wasn't interested in it. It wasn't what my expertise level was drawing me to. Now I have some opportunities at my desk for me to become a type A in something and to own the business that's going to create it. And if these things are successful, then my life has changed. And I could not put this on paper with IBC. Have my policies produce for me a higher internal rate of return over the last 11 years than what I could have experienced if I just put all the money elsewhere, like in the real estate market or the stock market or something like that? The answer is no, of course not. But if I had done all of those things, would I be able to take advantage of barbell opportunities? No, I wouldn't. My life would be fragile. I would have no real control over it. One black swan event and it's gone. So what I'm here to say is this is the life that we are presenting. This was a fun podcast to do. As I said, I tried to talk a bit slower just so I could get through this the way I was trying to get through it. That I think if you listen to this, maybe even twice, and understand the message we're trying to say, IBC looks better when black swan events occur, so you can't put those in a projection. Every other financial solution out there is going to put forth random projections, all of them which no black swan event occurs. So one strategy gains when a black swan event occurs. The other strategy only suffers when a black swan event. That's one definition of whether it's fragile or anti-fragile. We would say policies in the IBC system allow you to produce some anti-fragility to it. If you use the policies to take advantage of barbell style investments, you can experience life-changing rates of return, quote unquote, life-changing success in the investments you do choose. Almost all of those opportunities exist for type A investors. You may lose some, but you only need a couple to take off and suddenly your life has changed forever. IBC can be the bedrock of those style opportunities. And if you take advantage of them when they come, and if you have capital to take advantage of it when they come, then you will never have wished that you had jumped into the S&P 500 or funded this real estate syndication. I have money in some real estate syndications. I have money in some middle of the place. I'm just saying I'm not going to build my future on middle of the barbell strategies. I'm going to do only the true barbell strategy, which is saying a whole bunch of conservative, safe, with decent growth to keep up with inflation. That's the idea that he puts out in his book, which I believe policies fit the bill better than anything else. And I'm going to reserve that capital to mainly take advantage of the barbell-based approaches. And I'm going to stay out of the middle with the bulk of my capital. That way I'm always able to take advantage of life-changing opportunities, which will come for those who are trying to become a type A investor in something, or those that have the capital for when those types of opportunities come their way. Well, I hope you've enjoyed this episode. I've had a lot of fun doing it. If you have questions on this, feel free to reach out to me, Nate@livingwealth.com. Always happy to answer questions. This has been Dollars and Nonsense. If you follow the herd, you will be slaughtered.
One last thing before we go. Start your journey towards financial security and wealth today. Visit livingwealth.com/bank on yourself. Upon completing the course, you'll have all the information you'll need to see if infinite banking is right for you. Again, go to livingwealth.com/bank on yourself.